Britain at the brink, and copper miner discovers some nickel. You're listening to Kitco Roundtable. I'm your host, Michael McCrae. Kitco correspondent Paul Harris is here. How you doing, Paul?
Hey, Michael. Very well, thank you.
And with us is the CEO of Liberty Gold and a longtime friend of Kitco, Cal Everett. Cal, welcome to Kitco Roundtable.
Nice to be back again. It's a pleasure.
What are you focused on at Liberty?
Liberty Gold is focused on oxide heap leach gold in the Great Basin and their Carlin-style deposits that are sedimentary hosted and structurally developed. And we're working on two development stage projects at the same time. The number one project is Black Pine in southern Idaho, and the second project is in southwest Utah at the Gold Strike deposit.
We were talking at the beginning of this, both Paul and I were in Idaho last week. Looks like there's a lot of activity in that state.
Yeah, Idaho's a very interesting state because you can kind of divide it in half. You can take northern Idaho and southern Idaho. When you get into southern Idaho, you get more into a Nevada-style environment, right, where you're just getting more arid climates and lack of forests. And it's really just an extension of the Great Basin out of Nevada and parts of Eastern California. So it's a really interesting state, and you just have to understand where to go and what to look for and what to avoid in terms of environmental pitfalls and whatnot in order to select the projects you work on.
Let's turn to macro. As of this podcast, gold and silver prices are modestly higher as precious metals are catching a slight safe haven bid heading into the weekend. Investors are risk averse amid wobbly financial markets. As of this podcast, gold is in the 1670s and silver is nearly at $19 an ounce. Consensus is that the long term for the Fed is a focus on inflation and gold will stay weakened. Macro news of the week was a plunging pound, which hit an all-time low versus the dollar. New PM Truss embarked upon a plan of tax cuts, which some have criticized as being counter to the Bank of England's plan to reduce inflation. It also adds to the debt, which UK's finances have already been racked by COVID spending. We should know China's Purchasing Managers Index, or PMI, for September came in weaker than expected, further suggesting that the world's second largest economy is in trouble. China, a major customer for commodities, is looking wane due to problems with the housing markets and zero COVID policies, which is causing internal strife. This week, industrial metals were weak. Oil dipped into the $70 a barrel range, and copper has been soft with retracements to $3.30 a pound. Cal, I'd like to tag you on this and drag you into discussion and talk generally about macro. It's looking bleak out there.
Yeah, it's a tough time, and it's a market. I've been in this business, I'm going to guess, for 35 years, and on the sell side and on the buy side of mining. And, I'm in the gold space, which is one thing. But I invest in the copper space, and the nickel space, lead zinc space, all of that kind of stuff. But it's a different environment because we're dealing with really strong outside liquidity issues on a global basis that affects anything that you can buy or sell in a US dollar. It really does, right? And so when you go look at on a macro basis, you go look at what the Fed did. The Fed said that it was inflation was transitory, okay? And then about 3 months later, the Fed came back and Chairman Powell said that it's a temporary blip. And then the latest words I've heard are short-term recession. These are really just comfort words when you really don't know where you're going. And when all of that uncertainty is in a market, and you've got, you could be holding a government with physical gold holdings, and you need money and you need U.S. dollars because there's a run on the U.S. dollar right now. It's a herd mentality trade into the U.S. dollars. So you're going to sell your gold, and all of that affects everything. It affects copper, every metal, all products, all the way down the line. And there's no such thing as transitory inflation. It was never going to be a temporary blip. And if you think you're going to go into recession, you've got to really raise the interest rates and pull this planet to a sudden halt to try to get it lower. And you can say you have a 2% inflationary target on a globalized basis, but I don't think that's achievable now. Because if you look at the inflation numbers from the Eurozone this morning, 11 straight months, 10% inflation. So how much more pain do you have to submit the average person on the street to in order to get that inflation rate lower? And, my expectations are get used to a 3.5% to 4% inflation number. There's going to be a new norm, because getting it to 2% is depressionary type movements. And I don't see us getting anywhere close to that. So that's kind of why this whole market is kind of a bit of a mess. Doesn't make any difference what industry you're in, but it's a bit of a mess.
Cal, we have seen, though, some really steep pullbacks in a lot of commodity prices. I mean, you look at the run up at the beginning of the year, and you see, for instance, for lumber, there was also the real strong pullback back in copper. You're also seeing how China's mentioned before is weakened, and then now we see that we were expecting $120 or even higher for oil right now, and see that we're kind of bumping around $70 right now as well too. I mean, we are kind of seeing a sharp reversal in terms of these prices.
Yeah, the prices are reversing, but then you're dealing with paper trades. Okay, so you're dealing with derivatives, you're dealing with algorithm trading, and you cannot guarantee anything in any commodity that you're dealing with now. You can't guarantee it on food prices, right? Once the market is fixated on a margin, they will fight to keep those margins. And I don't care if it's a bushel of potatoes. The farmer gets X. The next 2 or 3 people that handle that bushel get X and X plus X plus X plus X. And they're going to fight for those margins. And commodity prices can pull back. And all of a sudden, if you read the reports out of the LME this morning, saying they're considering a ban on sale of Russian metal production on the LME, all of a sudden the copper price is at $4.50. How do you invest that way with so much uncertainty in the market? It's impossible to predict it. So when it's impossible to predict, I've been around a long time. I just sit back and analyze. I'm looking for opportunities, and I don't have a comfort level at this point just to go wading in.
The one other surprise that I've had is just for myself is just there's always this focus on the Fed, but you really respect the power of the Federal Reserve with the actions that they've taken and what it's actually done to the markets, Cal.
Yeah, I think they're absolutely doing the right thing by raising rates and raising rates and raising rates to try to shut this down fast. Right? It's punitive, yes, but I think they're doing the right thing about raising rates. And then I'm still at a bit of a loss over what the British did a couple of days ago, saying we're going to go from quantitative tightening to easing again and throwing money into the bond market, because basically they're the bid. So when you get all that uncertainty out there, people have a tendency just to say, I don't understand it. I'm going to hide and just watch. And when you hide and watch, that will generally slow the inflation rate down. But to what level, I can't predict it.
Let's turn to our remaining headlines, but first a word from our sponsor. Snowline Gold, ticker SGD on the Canadian Securities Exchange, is a Yukon-based explorer with one of the territory's largest mineral portfolios, amassed privately over 3 decades by prospectors Ron and Scott Berdahl. Snowline plans to go big. It is focused on a district-scale greenfield gold discoveries with the goal of finding world-class gold deposits. The company has consolidated district. Snowline Gold controls 254,000 hectares across the prolific yet underexplored geological analog to Nevada's Great Basin. The company is primed for discovery. Its extensive database from over 20 million in prior work has generated geological models and high-priority drill targets. The company is also backed by some of the best. Significant shareholders include Keith Neumeyer, Eric Sprott, and Crescat Capital. And sorry, I'm going to throw a curveball at you as well too, Cal, but I think you have an interest in it as well. Snowline is supported. It is a non-broker private placement of $25.23 million in July, making it well-funded for future exploration. Learn more at snowlinegold.com, ticker SGD on the Canadian Securities Exchange. Again, that's Snowline Gold, and we thank them for their support. Cal, I did mention you in the read, but you are an investor in Snowline Gold.
Yeah, I'm a buyer, and I've been picking away in the market on it, and I buy it for purely geological reasons. And in the day, I financed several companies in the Yukon who were looking at Nevada style Great Basin clones for Carlin style deposits, and I financed them through Alaska all the way down through the Yukon. And in this case, I'll probably confuse a few people, but this is a contact-related intrusive Hornfels contact. And it's a sheeted vein system on a margin of an intrusion. Means probably nothing to most people who listen to it, but there's an amazing amount of finely disseminated visible gold in those vein zones. And I've looked at the drill core on iPad because I can figure things out that way. And it's got scale. It's got strike, it's got scale. And I've talked to 3 analysts who have been to site. I have never been to site. I've been to site north of that to the ATAC property years ago, the Conrad discovery. And it's a bulk tonnage gold system. So the only negative I can see on it so far is it's remote and it needs to be a minimum of 10 million ounces. And I can easily put my arms around a target on just the rogue target that can give me 10 plus more million ounces. And when you get a disseminated gold system, and it's visible, I don't even question metallurgy. It should come in around 90 to 94%. If it had copper in it, might be a bit different. So yeah, I'm picking away in the market. I think it's a tremendous discovery, and the scientific group there are really good.
Paul, what were the mining headlines?
Well, the highlight this week for me, Australia's Newcrest Mining is moving into Nevada as it signed an option and earning agreement with Gunpoint Exploration to explore the Appaloosa property. Newcrest can acquire up to a 75% interest for cumulative exploration and development expenditures of $35 million US and cash payments of $5 million over 8 years, and completing a minimum indicated resource estimate of 1 million ounces. Newcrest will then have the option to acquire Gunpoint's remaining 25% interest. A lot of copper news out this week. Copper Mountain Mining announced updated reserves and resources and a revised life of mine plan for the Copper Mountain Mine in British Columbia in Canada, which supports an updated mill expansion scenario from 45,000 to 65,000 tonnes per day and will produce 138.4 million pounds a year of copper equivalent over a 32-year mine life. The expansion will commence in 2028 at a cost of $237 million to be funded from cash and free cash flow. In Arizona Sonoran Copper Company announced a maiden inferred resource estimate for the Park Salia porphyry copper deposit near its Cactus project of 143.6 million tonnes, grading just over 1% copper for 2.9 billion pounds of contained copper, which basically doubled the total it has at the 2 deposits to around 6.5 billion pounds. A pre-feasibility study is due in 12 to 18 months. Element 29 Resources also delivered a maiden inferred resource on its Elida project in central Peru with 321.7 million tonnes, grading 0.32% copper, containing some 2.2 billion pounds of copper as well. The company is working to produce a maiden resource on its Flor de Copper project in southern Peru as well, which is near Freeport McMoran's Cerro Verde mine, and that is due before year end. And finally, as you mentioned at the top, Ero Copper announced the discovery of a nickel sulfide system within the Curaçao Valley in Brazil, near its copper production facilities there. First pass drilling returned a highlight of 16.5 meters, grading 1.22% nickel, 0.17% copper, and 0.03% cobalt for 1.37% nickel equivalent in the VB zone.
Cal, I'd like to bring you back. We're going to talk about this bleak backdrop and then its impact upon the juniors. You said something in a previous interview, I think that was with Joe Mazumdar, and that's that there's too many companies out there right now that are competing for too few resources.
Well, the pool of capital is finite. And I talk to institutions, retail, brokers, corporate, royalty companies. They all have a different approach to the current market conditions. And in the last 4 days, I've been offered personally to invest into 2 new companies. But the projects aren't advanced enough for my liking. And So you got to look at all these different sectors and what they're thinking. And this is a context of the current market condition, which could be finite. And I'm a gold bull. I really am a gold bull. And this market could turn around yesterday and go straight up. But the producers have managed to kind of stoically make the gold industry the reasons we used to buy it, right? For inflation hedges or deflation hedges, geopolitical reasons, and all the other kind of things, and asset diversions in your portfolio, plus. They've kind of stoically made the industry a little bit boring for the time being. And if, like, I'm not going to go out and buy a blue chip mining stock because it's paying me a 2% dividend yield and doing a share buyback program. I want to invest in that producer for how it's going to grow, right? And what one producer completely succeeds at doing, another producer might fail, and that gives a little bit of uncertainty. So I'm seeing on that side, the producers are kind of sitting back and being conservative. Okay, so then you go into the institutional side. There's redemptions on the institutional side. If they wanted to go out and invest money into a new company, they're going to have to sell another company. Okay. And when you go into their portfolios, a lot of these funds have a mandate that this one company has to be a minimum of 0.3 or 0.2% of the overall fund. So if it's $1 billion fund and a company's share price goes lower, they might have to liquidate that position because it doesn't meet their mandate. And that is more selling in a market. Okay. And when you go look at the Newcrest deal that was just done with Gunpoint, I'm seeing a bigger tendency now for big money companies trying to say, we'll spend $35 million on your project for 75% of it, because they know they have to spend that money anyhow. So we're seeing more movement into the option joint venture side of the business. And on the royalty side, if the capital pool is not there in 6 months or 12 months, the royalty companies will move in and try to buy streaming deals in order to take away part of your project economics in order for that company to survive. So you have to kind of, for when I run Liberty Gold, I'm always looking a year in advance capital-wise, right? And you have to figure out where you are and when to pull the trigger on something that you need to grow a company. And once you've got that whole growth scenario figured out, and don't get panicky about it or whatever, just understand what you're dealing with. It's a lot easier to run a public company.
Paul?
I want to sort of pick up on something you mentioned there, Cal. You sort of covered a lot of interesting ground there. The mining sector, the big producers have been making a big effort in recent years to, let's say, reposition the sector to sort of stable, predictable, reliable companies, 10-year mine plans, dividends, etc., to supposedly appeal to more investors. But it sounds from your comments that you think they're sort of playing the wrong game. If an investor wants stable and boring, they put their money in a real estate investment trust. Is the mining sector now playing the wrong game?
Well, it reminds me in the day when I was way younger and had color in my hair, when Noranda was held by every dividend fund in Canada, because they were in the lead zinc market, but if they were running out of money, they always had a 5% dividend yield. So they had to go into those markets, right? So why would I go out and buy a gold stock for a yield when I can take no geopolitical risk and buy it for, why wouldn't I buy a clean energy utility that raises its dividends every 5%, right? And so it's kind of like they've retrenched backwards, and they're thinking about where they want to go. And a few of them are getting aggressive now. Like, I think Newmont has got a high yield, but it's getting aggressive. It's looking to accumulate assets. But other companies you talk to on the production side, because I talked to virtually every one of them, they're going, oh, well, we don't pay premiums. And then all of a sudden you get a 30% premium for Goldfields on Yamana, and that premium was gone in 24 hours, right? So it doesn't make any difference what you put out right now. If the share price isn't up, at the end of the day, I think the market perception is it's bad news when in fact it was exciting, right? Because you could go look at Yamana plus Goldfields in 3 years, and that stock could be an absolute steal of a buy on an amalgamated basis, right? And that's why the short-term thought process plays into the investment into a sector which has really no new major mines are getting played out since 2020, right? And if the companies can't go find the product they want in gold or silver, they're doing what you just covered. They're getting into the copper market because there's a shortfall in the copper market. So yeah, it's a fascinating time, and I just think you have to study it and study it and study it.
Thank you, Cal. I want to sort of also touch upon your comment about there's too many companies out there. Now, this has been a theme for a long period of time, the need for consolidation. Some of the big investors in the space, I'm thinking here of the VanEck, said there needs to be more consolidation. But when the sort of push comes to the shove, it seems that the big investors are not necessarily prepared to pay for that consolidation, because obviously amalgamating 2 or 3 companies, there's a whole bunch of legal fees and advisors fees that runs into the millions of dollars. Investors want consolidation, but they're not prepared to pay for it, it seems.
Yeah, they don't want to pay for it, but that's the cost of doing business, whether you like it or not. Because a public company who agrees to merge company A with company B, they need independent financial advice who sign off on a document that said that's a fair transaction, and that can cost you a lot of money, okay? And you have to do that, and it's done that way because of the fact you need independent advice, even though you paid a fee, to get it verified and vetted by a sell-side banker, so it's in the best interests of the shareholders. Remember, the securities commissions, their job is, and they do a good job at this, is representing the shareholders of public companies. And there are those requirements and accounting bills and due diligence bills and legal bills that have to be assumed in order to do something. If I wanted to go look at a company that Liberty Gold might want to merge with one day, and I have to use independent consultants, I'm going to tell you right now, it's $300,000 to $500,000, and it could fall apart. Okay, that's what it costs, right? And you can do it internally and just say, "Oh, I'll just do it," but to taking on that liability without an independent resource estimator, independent metallurgical groups, independent engineering firms to vet whatever their resource is to see if it's compliant or not. You have to, it's a lot of work. It's costly.
Wow, that is a lot of money.
It is a lot of money, yeah.
Getting onto that theme, Cal, is it a problem though that there's just not enough dollars that are going into the resource space, or that we just have too many companies with too many projects? Because we always keep talking about that. The industry is underinvested. You're seeing severe shortfalls in a couple of years that are coming out with various metals. Is it just the fact that people should be paying more attention to this? But right now, the sources of capital are just too few.
Yeah, listen, well, I'd personally rather put my risk capital, we'll call it, because this is the business we're in, into a company that has cash in its treasury, good management, a discovery that's verified as a discovery in the right geopolitical location, and I'm ticking the risk boxes all the way when I put that money into that company. I don't care what the market cap is, I'm putting my money into that company. I'm not going to go out and take my risk capital and pay up to invest in a company that took a grab sample in some obscure country in the world, because a grab sample is a visual sample. You know exactly what's in the sample before you put it in the plastic bag, right? It's an education a system where the investors in this market, I wish there were courses given, or maybe there are courses given, just to teach people what the pitfalls are of investing in this sector. So all of a sudden, a sell-side banker is fee-based, okay? They get paid for what they produce. So all of a sudden they're financing any company with a pulse. And then all of a sudden there's no money for those companies, which is kind of what the market is right now. And then they're looking for M&A fees. They're always fee-based. And you just have to understand who's giving you the advice and what the agenda is behind that one advisor. And then if you're trained in the industry, you'll know what's worth paying attention to or what's BS.
Now, Cal, you recently released an ESG report. How's your source of water for Liberty?
Oh, water is almost more important than gold in the United States right now. Liberty Gold kind of operates a little bit different than a lot of companies in the fact that if you need water, you don't put out an economic study and then say, oh, I need 3,000 acre feet of water. Because it's going to cost the company way more because you need the water, if you can find the water. Okay, so we've been securing at Black Pine first. We've got 2,300 acre feet of water secured for a mining operation that would do a 70,000 ton per day heap leach oxide gold operation. That's a big mine, okay? And we're still looking to secure more. But the water, you can't get a new water right in the United States. You have to get it, right? So we secure it under 25-year leases with a fixed price, hedged with inflation for the people. When we draw down that for mining operation, we start to pay. None of that water can come the way we operate below the water table. They're already granted water rights. It's oxide gold above the water table, and there's no sulfides involved, so you're not dealing with anything that's going to create a water treatment plant or anything you want to do. If it's above the water table, do you know what ponding is in a heap leach, in a pit? Ponding means if the bottom of the pit goes below the water table, there's a lake in the bottom of your pit. The water table is flowing through the bottom of your open pit. We don't do that. We stay above that. So we've secured all those water rights, and we're also securing power and fuel costs, everything before an economic study, because I've got to keep ahead of inflation. Okay, I don't want those risks on an economic study. So at Black Pine, yeah, we're almost done on our water rights, and we've been secure. We started working on that 2-3 years ago, and you just don't want to get caught behind the 8 ball, because this is a water planet at this point right now, when everyone's questioning where the water is coming from, and you have to do it properly, and you have to do it environmentally consciously, right? You cannot go out and do things. So when Black Pine was picked up, we knew about the water. There's no streams on that property. There's no fish-bearing streams. There's no timber values. There's hydropower to the front gate of the discovery. There's no Native American communities anywhere near it. They're an hour and a half drive away, and they've been fully engaged in what we're doing. We have a good relationship with forestry services, quite frankly, because there's no trees there. There's no timber values. And with the Bureau of Land Management. And you knock off all these little ticks, and that's where you know where you go. So when Paul says he likes Revival Gold, Revival's advanced. It's a good company. Okay, and the guys who run it are really smart guys, and they have a lot of ounces. Other areas in different states are no-go operations, and you don't want to have a tailings pond associated with it. You do not, because that is just extending your permitting timeline. So it's a bit of a puzzle or an art to figuring these things out, or where to go and where not to go. And it's way easier to find a reason where not to go than it is where to go nowadays.
We should mention that we had a conversation, because I couldn't get myself organized at the before the podcast where we were talking about mine tours, and Paul was fortunate to go see various mines in Idaho, and we were having a conversation about what was advanced and what was looking good. I was up in northern Idaho. I was looking at Bunker Hill Mine. Now, Cal, you've just added a level of complexity then to investors, and just talking about, if you don't have to understand geopolitics, if you don't have to understand community relations, how is somebody expected to understand water and its impact upon water for a junior getting advanced? And who would be reporting on that? And would you actually kind of see that coming out of the reporting, Cal?
Well, we do it all internally.
I was talking generally, though, Cal. If you're investing in another company, for instance, where would this paperwork or where would this assessment exist?
I'd phone the company, and ask. pretty simple. It's the amount of time of a phone call to figure things out. Like we look at everything in Idaho, Utah, and Nevada. That's our job. And we understand where we would like to go, and we've tried to go and sometimes failed, and where we don't want to go and we won't go there. It's as simple as that. It's an internal decision. But you could have a 2 million ounce oxide gold system at 2 grams of gold in the middle of nowhere, but not a drop of water to drink. That theoretically could be waste, right? So you better pay attention to your water. You have to.
Lastly, Cal, what's your cash position for Liberty?
We should finish the year, I would think, between 16 and 17 million US, and there's 4 drills operating right now. And we've got a healthy cash cushion, and that's part of the planning, right? Of keeping a company going, and I'm always working on monetizing our last Turkish asset and things like that. And if I can move that, then we're in heaven.
Let's turn to our number of the week. Cal, guest always goes first.
Oh gosh, this is the only time in my life I've been asked this question, just to let you know. And I'm going to be optimistic this week, and I'm going to compliment the number 61. Aaron Judge tied Roger Maris's 61 home run record on the 61st year after 61 years of Roger Maris holding that title. You get 2 61s out of me on that one.
I think you're first. I think this is the very first time we've had a sports number. Paul, what's your number?
My number is 10%. And that's the haircut shareholders in cash flowing royalty company Sandstorm Gold experienced this week after the company announced an $80 million bought deal raise of $15.7 million shares priced at $5.10. Its shares had closed at $5.57 the night before.
My number is 2 billion. MMG is to invest 2 billion in its Peruvian Las Bambas copper mine over the next 5 years, as reported by Reuters. The Chinese miner is seeking to double production from all of its operations by 2025 and double again by 2030, despite recurrent and ongoing disruptions at that mine. That's it for us. Cal, what's the next 12 months milestones at Liberty?
I would expect in Q1 of 2023, we're going to update the resource estimate at Black Pine, and that'll add well over 100,000 meters of new drilling to it. It'll include new discoveries at the F zone, the new range front discovery, and the back range and E-pit and things like that. And I think you're going to see an interesting increase in resources at Black Pine, where we would, when we've publicly stated this, we think it's gone into the 3 to 5 million ounce range. And then we'll be discussing what we're gonna try to finish off our water, and then we'll make a decision whether we just go directly to a PFS study and not play around with the PEA and spend $500,000 on something that we're going to have to do the other one anyhow. So I think that's where your news flow comes.
Cal, we should have done this months ago.
We should have. And now that I know I can pick a lucky number, I'd really beat you 2 guys up on that 61.
Follow me at Michael McCrae. That's McCrae with 2 C's. Paul is at Paul Harris Gold. Cal, how can people get a hold of you?
Just get a hold of me through our website, or you can go to our PowerPoint presentation. You can see links. And if anybody wants to talk to me directly, I'll talk to them all.
If you like what you hear, tell a friend, and don't forget to subscribe. On behalf of Paul Harris, Cal Everett, and myself, have a pleasant weekend.